Hello, and welcome to the latest episode of Renegade Investor Report with me, Rowan. In this week's episode, I want to focus on the Middle Kingdom, the People's Republic of China. And I want to ask the question, will politics kill China's golden goose? This Renegade Investor Report is brought to you as ever by two organizations, the Beaufort Society, and you can see more about them at beaufortsociety.com. They are a private members club for high net worth investors, and one of their specialities is connecting people directly with property developers through their property connection service. And you can see them actually at the upcoming London Property Investor Show at the Excel Centre in the middle of October. So if you want to go along there, just have a look at the website. Also by Crypto for Grownups, which is the organization that I'm proud to be a part of, which tries to help the kind of over 40s generations to get more involved in this digital asset space. And you can see more at cryptoforgrownups.co.uk, and also on this channel every Thursday at 6 o'clock when I do a live broadcast with sector expert Dee Ludlow. So hope you'll get some value from those. As I say, this week's episode very much focused on China, which has been in the news for all kinds of reasons recently. And I think really what I want to try and do is set the history in context, because to understand what's happening in China today, we need to go back really over 100 years of history. Now, I'm only going to do that in about one slide, so don't get too upset, don't get too worried. But it's important to put it in context as to what's been happening and why, and more specifically for us as investors, what does that mean in terms of the likely impact on direct investing in China and possibly any kind of ripple effects across the rest of the world? Because there's a lot going on there that ain't particularly good news for investors, frankly. And I think, it's important that you know this stuff, particularly because what you may or may not know is how much of your pension or your ISA or your investment funds are actually invested in some of these Chinese companies or in Western companies that heavily rely on the Chinese market for their growth, for their profitability, and ultimately for their dividends and the share prices that you're hoping they'll achieve. So you can't ignore China. It is just too big. The population, some of the numbers I'm going to share with you are really quite hard to get your head around. But it's not a kind of one-way ticket to the stars that some people would have you believe. There's all kinds of issues that are going on inside China, and many of them do not augur well for Chinese companies or for Western companies that rely on the Chinese market. So, a brief history of communist China. I do not claim to be a Chinese historian. I'm just taking some of the real key events over the last 100 years. It is, as you're probably aware now, a century since the Chinese Communist Party was actually founded, and they had a big celebration in Beijing to mark that. But there was a long old struggle, and I've spared you all the details of the Long March and all that kind of stuff in the 1930s, but it was actually after the Second World War in 1949 that the communists actually took control of China under Chairman Mao. And as we get into the 1960s, one of the most infamous events of his era was the Cultural Revolution. And the goal was to purge any remaining vestiges of capitalism from all the previous centuries, where obviously China had been an enormous trading nation, one of the world's superpowers indeed. So because they were now taking over, it was kind of regarded as passé. You really could not have any kind of vestiges of capitalism. And of course, it was all relatively new. 1966 was only 15 years after it happened. So imagine a revolution taking place in Britain or America in 2006 and changing from the entire history of our capitalist background into this communist state. 15 years would in no way be enough for that to have permeated the whole culture and for us to have given up on any kind of vestiges of freedom or free markets or any of those good things that those of us with long memories can recall. So this was a purge. And frankly, it was a horrific purge. Millions of people died in the name of true communism and getting rid of anything to do with capitalism. And then, as these things tend to do in the cycles of history with different leadership and so on, it all changed in 1978 after Mao's death and the coming to power of Deng Xiaoping. And he had a much more modernizing agenda. He saw the poverty, he saw the desperation of so many people, and he recognized that there was actually some good in this capitalist stuff, that you can actually lift society, you can improve everybody's standard of living from it. So he focused on 4 areas that he called the 4 modernizations. That was the economy, their agricultural practices, which were kind of medieval, science and technology, and all the kind of stuff that in this country Harold Wilson was talking about at the same time, and of course defense. And that had a major effect, as we'll see in a moment. I'll talk you through some of the really powerful results. And in fact, really, you could argue everything you see in China today is thanks to those modernizations in the era of Deng Xiaoping. And then, as these cycles tend to do, it kind of turned again in 2013 when President Xi came to power, and very much seems to be keen on replicating this cult of personality that was built around Chairman Mao, and also in terms of his grip on power. He really is becoming an omnipotent dictator. And I must admit, I find it vaguely amusing that if you look at the 2 big workers' revolutions of the 20th century in Russia and China, they have ended up with probably 2 of the most totalitarian, authoritarian dictatorships on the planet. It's enough to make me reach for a copy of George Orwell's Animal Farm. It really is. So we're now celebrating 100 years of Chinese communism, and it's a very interesting hybrid kind of era that we're now going through. We're actually, I think, heading for a second cultural revolution with the style of Xi's leadership. His latest announcement is that 10-year-olds will be forced to study his political philosophy. And that's going to be a mixture of patriotic kind of education and praise for this leader, this cult of personality. For the last 30 years, they've not taught communist doctrine until you get to middle school, when it's thought that you can at least start to think for yourself and take these things on board. Now it's going to be down to the level of 10-year-olds. And just one sign of how factually accurate these education sessions are going to be is that even though he's never been near a military uniform in his life, Xi is being portrayed as an old soldier. Let's just rewrite a bit of history here to glorify the great leader. So that's kind of what's going on culturally, but there's no arguing with the success of Deng's reforms. Since they started in 1978, while you and I were watching John Travolta and Olivia Newton-John in Greece, they started a process that's taken 800 million people out of poverty in that time. And that is an astonishing number. I mean, what's that? 3 times the population of America taken out of poverty through those reforms. 340 million, that's significantly more than the American population, are now regarded as middle class, and they define that as incomes between 15 and 70,000 US dollars. That number is expected to reach $500 million within the next 4 years. So the middle class alone will be double virtually the entire population of North America. That's why this is such an important market for Western companies. They just can't ignore it if they want to grow. And look at the number of billionaires it's created. China has now got more than America. That is an astonishing feat, 1,000 billionaires. But of course, part of this, and this is always something I think about when I compare the success of entrepreneurs in, say, Britain with America, when your addressable market is 10 times bigger, it's relatively easy to become 10 times richer. So if you have a good idea or a good business model, a good franchise, a good product, you can sell it to 100 times more people or 10 times more people. You're going to get richer. And that's what's happening. They've got a bigger addressable market that's growing fast. I mean, how about having 150 million new middle-class customers in the next 4 years? What would a British company give for that? That's what these guys have got open to them. So no wonder there's 1,000 billionaires and $5 million millionaires in China. So, that is the most enormous success of this kind of capitalism within communism approach that was started by Deng Xiaoping back in the late 70s. But of course, we're forgetting something here. This is meant to be a communist country. This was like the result of a workers' revolution. This is the country that went through the Cultural Revolution in the 60s to get rid of capitalism. And now capitalism has brought enormous success to the country. Well, if you're the communist government, you can't have that. That's kind of not the narrative that we're looking at here. So what's actually happening? Well, this is a challenge to a communist dictatorship because 1% of the population now controls more than 30% of the overall wealth. And although 800 million have been lifted out of poverty, there's still 600 million people living on $1,850 a year or less. So effectively, poverty line, subsistence kind of living. So that's not acceptable. And the Gini coefficient, I don't know if you're aware of that, it's a kind of a way of measuring wealth inequality in a country, is dangerously close to what it is in America. And if you've traveled to some cities in America, the difference between the haves and the have-nots is startling. I suppose, they've always been known for this kind of American dream where you can go from rags to riches. It's, I think, something of a fallacy these days, to be honest, with the way America's gone. But with their kind of level of wealth inequality in a capitalist country that's allegedly free markets and so on, and every person for themselves, China is almost as bad as that in terms of wealth inequality. So that obviously doesn't sit well with leaders who are at heart more concerned about maintaining communism and the power of the state than they are about any kind of level of economic success. So you have to understand the drivers here. They probably like the economic success, but they don't like anything that challenges them, their power, or their narrative. The narrative is that Xi's this great leader. The problem is you've got 600 million in poverty. You've got some very, very wealthy people and some very big companies that have been exercising a lot of power. So that's a bit of a powder keg that's been developing over the last 15 or 20 years. And with a leader like Xi in charge, it's not going to be allowed to continue. So he has announced a new focus on what he calls common prosperity, a term that could have been coined by Jeremy Corbyn or Karl Marx. What he wants to do is to regulate, note, excessive incomes and encourage, that's a lovely word, isn't it? When you've got the army, the missiles and the guns, it's relatively easy to encourage high income groups and enterprises to really give more back to society. So there's going to be a lot of encouragement going on for these people. I'll give you some examples in a moment. Just this announcement of this refocusing caused 61 billion euros to be taken off the value of luxury companies like LVMH, Hermes, Richemont, Burberry, and so on. These people really sell into the Chinese market because the Chinese buy almost half of all luxury goods sold around the world. That's an incredible statistic that bears repetition. China alone, this still regarded technically as an emerging economy, is responsible for nearly half of all luxury goods purchased. One of the early times I went to China, I stayed in this hotel in Beijing, went out to get a coffee, crossed the main road, and there in front of me, I found on the right, a Ferrari dealership. In the middle, a Bentley and Rolls-Royce dealership. And on the left, I think it was a Lamborghini dealership, lined up in a row. And I had to cut through them to get to Starbucks, that was well established there at the back. So that was my first exposure to communist China. So there's clearly a lot of money there, a lot of money being spent, and a lot of bling there. And one example of this Gini coefficient, this wealth inequality, is that 25% of that group of people is just 25% of that spend comes from just over 100,000 people spending 6 figures a year on fashion and jewelry alone. Now, I don't know about you, do you or your better half spend 100,000 a year on fashion and jewelry? That's the scale. I mean, movies have been made about this, haven't they? You know, there's such this kind of focus on bling and conspicuous consumption. But I think those days could be over. Here's a couple of quotes, one from a branding agency saying, it may be prudent for luxury brands to keep a low profile for a bit. They might consider toning down the marketing campaigns they're planning for the autumn and winter so as not to emphasize exclusivity or elitism, which of course don't play well in a communist country. And another guy from Jefferies, the market analyst, saying, if President Xi keeps talking about this or announces specific policies, the market could be in for a very volatile time. So these are Western companies focused on luxury, big spenders in the Chinese market. Have you got shares in these companies? What's the outlook for the next 12, 18, 24 months for these kind of companies when the government is clamping down on conspicuous consumption and encouraging people to give more back and not to effectively be quite so blingy? So what are the regulators going to do about these companies? Well, they're going to increase taxes on luxury goods. That's an obvious thing they can do, just make them even more expensive, and that always has a dampening effect on them. They're going to crack down on the influencers who flaunt their wealth on social media. This is one of the few things that might be a good idea. Don't you just hate these people that kind of say, oh, look at me, here's my Rolls Royce, here's my Ferrari, here's my big mansion, you know, look at that. They've probably rented them for the day just to take the photographs, but, you know, they're so concerned with appearances and trying to show off their amazing lifestyle that they are all over Instagram and Facebook and everything else. Well, cracking down on them might actually not be a bad thing. There could be something our government could learn about that. There could be advertising curbs. They might tell you to stop looking at, you know, showing this luxury lifestyle and flaunting wealth and material goods in advertising. Very easy to do. Look at what we've done with things like tobacco and alcohol. They're also going to intensify controls on people called the Daiju. I'm not sure if I've pronounced that right. There actually are professional shoppers who go all around the world. And if you go to, where's that luxury outlet? Bista, isn't it? Bista Shopping Village, probably where the Wuhan flu came in. That's full of professional shoppers buying stuff to order. They're videoing it in the shops, going straight back to China. Is that what you want? Is that the right size? Does this look okay on me? Shall I buy 3? You know, they're buying them because they're so much cheaper there than they are at home at the moment. They're also going to try and pressurize the brands to reduce the big premiums that they add to their prices in China. So part of the reason you have professional shoppers is that the prices are loaded heavily by the actual companies themselves, let alone the authorities putting any taxes on them. So these are some of the things that the regulators are going to do. And even, I suppose, the kind of nuclear option for them would be to start nationalizing some of the companies if they don't do what they want to do. But, you know, we'll come back to that in a moment. So that's the regulators. What about the politicians? Because arguably, they're the ones that hold more sway in this. And it's seen as a political problem that there are so many wealthy people in China, so many big wealthy companies, and still an awful lot of people that are regarded as being the have-nots, if you like, in that world. The obvious one, which I think we're probably going to see and already starting to see in the UK and the West, increased taxes on wealth, especially capital gains taxes and inheritance taxes. I think you can just imagine that they're going to have a field day with that, just in the same way as a Jeremy Corbyn type person would. A lot of the tech companies on the internet have actually benefited from a low corporation tax rate of 10%. Now that could be brought in line with other companies, so they could face a hike up to 25% if they don't comply with the president's requests. Encourage philanthropy by billionaires and large corporates. That encouragement, which is very much, you know, the velvet hand in the iron glove or whatever it is, they've got a lot of power behind that encouragement. And they're going to try and use social pressure, moral obligation, and it's working already because 7 billionaires have already given more this year than everyone in the country gave to charity in 2020. So this encouragement, what it leads to is a kind of virtue signaling in the same way as you're seeing all this ESG stuff now in, in companies and fund managers and institutions. Look how green we are, look how environmentally friendly we are. Much of it a total kind of smokescreen for all kinds of issues going on underneath. Here you're going to see, look how much we've given to charity, President. Aren't we good? Here's another $1 billion for whatever your favorite pet project is this month. That's going to go on as well. But all of that obviously has an impact. It affects, what companies have got. It affects profits and earnings. So the other thing, obviously, that politicians will do, just as we've seen in the West by, HMRC has done this with celebrities in various tax avoidance schemes in the past. You make a few examples of high-profile people pour encourager les autres, as they say in France. One of the obvious ones being Jack Ma. There's no room for someone else to be a big personality when you've got a president who wants that role solely for himself. Jack came out with the absolutely correct and true statement that today's financial system is the legacy of the industrial age. We must set up a new one for the next generation, and for young people, we must reform the current system. Absolutely correct, Jack. But that is obviously perceived as criticism of the almighty state. So the result was Mr. Ma disappeared for a few months, and when he reappeared, having been through presumably some kind of electrification program and retraining program, presumably with most of his body parts still intact, he then started giving away billions of yuan to charity. He was encouraged to do so, and I'm pleased that he responded to that encouragement. So what's the big picture of all this in China today then? Because as I say, it's to me been very much a shifting sands in the last 12, 18 months compared to what the story was. Because if you think about it, the narrative was always that the 19th century belonged to Britain, the 20th century belonged to to America, and the 21st century belonged to China. That may still be true, but I think there's some significant cracks appearing in that narrative that might just lead it to change in the next few years. They want to move from being the workshop of the world, in other words, cheap labor making stuff, as they've got hundreds of millions of people coming into their middle class now. They earn more than factory workers. They want to become a consumer economy, just like the West. The fact that these consumer economies are technically broke is irrelevant, but they are trying to move from making stuff to buying stuff. There's a huge amount of internal debt in China now, and it's growing at least as massively as anything in the West. But they've also got capital controls in place, which means it's very hard for money to leave the country. Anyone who's historically been involved in helping Chinese people to, say, buy property in London or any kind of assets outside the country will know that there's been all kinds of channels used through Hong Kong, through private banks, through other institutions. It's really become harder and harder to get any more than your annual allowance of, is it $50,000 out of the country at any time. So capital controls are in place there. Another thing that is obviously in the toolkit of Western politicians and central banks. So, don't rule that one out, by the way. Remember where you saw it first. There's a slowdown going on in the economy that can actually prove to be deflationary, which is always the big fear of governments and central banks. The bank stocks, the share prices of banks have been going down in the last couple of years, in some cases by as much as 40%. The reserve ratio has been reduced. The capital reserves being asked by those banks to maintain on their balance sheets have been reduced. In other words, let the banks go into a more risky, less secure state, a sign again that things are looking a bit flaky. Questions being asked about whether the currency might get devalued in these circumstances. The banks have currently got $52 trillion worth of assets against an annual GDP of less than a third of that. So again, that's a high risk situation with that level of debt versus GDP, high risk. And even the foreign exchange, the foreign currency reserves are small and declining. So this is not, if you were a forensic accountant looking at this as a company, you would say they've got some significant challenges. This is not a glowing health report on the Chinese economy. As I say, bank shares are declining. This is the Industrial and Commercial Bank of China. There has been a steady kind of upward trend, but it's now suddenly crashing down through that as confidence decreases. They've been allowed to reduce their reserve deposit ratio. So you'll see that the blue line here has been going down. And then the Chinese yuan against the US dollar has been very much kind of up and down recently. Remember, obviously, the dollar theoretically should be getting a lot weaker because of all the currency debasement. But if everyone else is doing it at the same time, they kind of keep getting away for it, at least for a while. Foreign reserves declining as well. Again, just not the sign of a healthy situation. If these currencies are coming down, these reserves are coming down, they're either being used to shore up their own currency, or they just haven't been putting money into those reserves. They've been burning them up on other internal expenditure. Asian stocks have been losing ground against the MSCI World Index. So the red is the Asian stocks, the white is the World Index. So the world's investors are saying, we're not so sure about Asia at the moment. I mean, actually, as we record this in the final weeks of September, there's been some wobbles in America as well. So obviously these charts are not real time, but the trend has been for Asian stocks to be weakening against global stocks rather than strengthening, which again suggests that the market thinks that China's in a bit of trouble. It's kind of saying, there's some weakness there. The banks are not looking so great, and some other stories that are going on at the moment do not fill us with confidence. So we've got Asian share prices looking weaker against a basket of global shares. And of course, if you've watched any of my material over any length of time, you'll know how concerned I am about what China's been up to in Hong Kong. You can argue Hong Kong itself has been the golden goose laying the golden eggs these last few decades. It's become an enormously powerful financial center and really the hub of Asian financial transactions. Well, China's decided that for whatever reason, it didn't like the one country, two systems model, and it's imposed these really, really strict laws. I mean, I've heard it compared to a constitutional coup d'etat. They've really just taken over the country. It's now a crime to stand and hold a blank sheet of A4 paper. You can get arrested and treated like a terrorist for doing that. And even just a tweet has been enough to get an Australian banker fired by his company for daring to offend the masters in Beijing. So clearly the direction of travel is for more and more and more government intervention. It's kind of how do you keep running capitalist businesses in a situation where you can't break wind without the government knowing about it and potentially being arrested for it. So it's a fragile situation for these companies, and it's been exacerbated by all the travel restrictions around the banana pandemic. They were going to ease travel restrictions. Then there was a U-turn. They've actually increased quarantine from 1 to 3 weeks for people who have traveled into the country. So, that makes it almost impossible to operate an international business. So, the companies themselves, the staff, I mean, if you're a bright graduate in London, you would be crazy to consider going and working in Hong Kong now, no matter what salary they offer, no matter what the career prospects are. No amount of money in the world matters if you're banged up in a Hong Kong jail for some careless remark you might have made to somebody who then rings the informer hotline and tells the security authorities about you. So a lot of these companies and their staff are now looking to relocate to Singapore. And I'm delighted to see that Britain has stepped in to offer nationality to these people, and potentially 300,000 of them are expected to take UK citizenship. And I know a lot of them are looking into other countries like Canada, other parts of Europe. So there is a mass exodus from Hong Kong underway. It'll start with the people, and then it'll be the companies that just think this is getting too expensive and too much hassle. Let's either go to Singapore or just move completely back to the West, because we just don't need this amount of interference. So that process, I think, will unravel over the next few years. But clearly for me, Hong Kong is a busted flush. It's over for Hong Kong, essentially. It's just a question of when the house of cards finally collapses. But that's not all that's going on. All these tech companies that have become so big and powerful and successful have relied on squeezing every pound of flesh out of their staff. And they've had this 996 policy, which is 9 a.m. to 9 p.m., 6 days a week, being the kind of expected working hours in these companies like, Tencent and Alibaba and all those kind of success stories. So sitting behind that kind of veneer of capitalist success, there is undoubtedly exploitation of labor, kind of almost slave labor conditions. And finally, that has become officially unacceptable. So the courts have branded this illegal. Jack Ma used to call it a blessing to work like this. Well, I think most people would say that's beyond a blessing. If you look at where we've gone almost in the opposite direction in the West, with the kind of desire for a work-life balance that things like lockdown and furlough have brought on, and fewer people actually even participating in the workforce at all, you can see that working 12 hours a day, 6 days a week for an employer is maybe not that attractive. But of course, what that implies is increased labor costs, because that has to be replaced by more people working more sane hours, and that's going to increase costs, which will reduce earnings and profits. There's also a desire now from the kind of digital regulators to see more transparency around algorithms. And there's a comment from a market analyst here at Gavacal that this is not a one-off campaign that's going to relax after a few months. It's a new environment which will impose more and more limits on internet firms, their growth and their profitability, and will give state control a larger and larger say in how these players operate. So companies like TikTok, ByteDance that owns them, they're going to really see a difference from this. So not only are they going to have more staff to cover the reduced overtime, they're going to have to start basically opening their intellectual property to the regulator, and making it clearer. For example, you can't just recommend things that are your own products. You have to open the platform up. It's not dissimilar to the thing that we've had with Apple and their payments system recently in the West, where they were trying to hang on to a monopoly of all the payments and the big juicy commissions they take. They're onto this in China as well. And the tech companies, I think as much as anything, what's behind this is they're trying to dismantle some of their power. And they just want to say, look, guys, you ain't doing nothing without state say so. We want to be right in the heart of your business. We want to understand how your algorithms work. We've seen the same thing, obviously, in the crypto sector with the miners coming under a lot of pressure. Now, all that's happened there, of course, is a lot of that mining activity has moved to North America. So again, that will have a reduced effect, or a reducing effect on China's GDP. It will reduce the amount of business done in China. Every step you take like this that makes it harder to do business, more expensive to do business, will encourage people and firms to go somewhere else where they're treated best. And that's the dilemma you've got when you're trying to superimpose communist authoritarianism on a capitalist type of society. Because whenever I go to China, I'm always impressed by the people. They're such hustlers. They're such entrepreneurs, far more so than most of the people I meet in America. They are like America a century ago. They are really, really hustling. They really want to be successful. And it's all being damped down by the state because it wants to be seen to be more communist. So, I think a lot of these Chinese people would do really well if they came to the West, if they're allowed to get out. But, we have this very sad scenario where I think America has actually lost a lot of its drive. China has that drive, but it's being suppressed by the government. None of this augurs well for the future of free capitalist markets on which so much wealth and prosperity has been built in the last 100 years. So I'm not sure this ends well for the planet, full stop, regardless of your views on China. Anyway, I will move on. What we've seen is nothing short of systematic government attacks. They've gone after the education sector, the gaming sector, electronic payment companies, property developers, obviously big news on that one this week, big tech companies, even I talked about the bling stuff. Some of the celebrity profiles have started disappearing from social media. Can you imagine if all our soap stars and our reality TV stars suddenly start disappearing from Facebook? Actually, that's not such a bad idea, is it? I think we need President Xi to come over here, you know. But some of these attacks are really, really serious news. The opposition to the technology IPOs, you know, DD, which is their kind of Uber equivalent over there, they did an IPO, and then suddenly within 5 days, the authorities said no new user registrations. Companies, if you've got more than 1 million users, will need our approval before you'll be allowed to list on an overseas stock market. And then Ant, the payment system, their Hong Kong IPO was suspended at the last minute because you know, Alibaba, that owns Ant, was fined $2.8 billion for monopolistic practices. See, this is a bit like, you know, whenever you've got a political opponent in these countries, they always get accused of something like tax fraud. It's absolutely unprovable, but it sounds important and it sounds untrustworthy. So part of the tactic, and I'll cover more of these kind of things on next week's episode, the tactic is to undermine these leaders and these companies to reinforce the power of the state. So here's the state giving an enormous slap on the wrist to Didi, who I guess went public without getting all the ticks in the boxes from their home regulators. And again, a slap on the wrist for Jack Ma with you know, huge wealth that could have been created in that IPO being stopped by government intervention. What about the education sector? Now, here we have something called the double reduction policy. We've had common prosperity. Now let's talk about double reduction. Essentially, academic tutoring businesses were ordered to suspend all their online and offline services for children below high school age. Now, there's a very competitive education system in China, and parents spend an awful lot of money on tutoring out of hours to try and make sure that their children get into the best schools. Never mind just moving to the right postcode. Here, you've got to be in the absolute top academic echelon to get into these schools. So they all spend a fortune relative to their incomes on tutoring, and a whole industry has grown up to serve that, providing all kinds of training online and offline, evenings and weekends. The regulators suddenly announce you can't do that anymore. They're ordered to restructure as non-profit entities. Can you imagine if every education company in the United Kingdom or North America was told that as of tomorrow, you're a charity? Well, but we've got all these shareholders who've put all this money into us. They're expecting dividends. They're expecting growth in the company value to get a return on their investment. Now you're saying we have to not make any profit. The value of our company is just being wiped out by a government diktat, by stroke of a pen in Beijing. That's what happened. Stop offering courses at the weekend or during school holidays. Companies in this $123 billion market became instantly uninvestable, along with between 30 and 70% of the 10 million jobs that they provide will be lost. The ones that were publicly quoted lost 50% of their value in 24 hours. So, you know, that's the kind of thing that happens when you have a dictatorial, totalitarian government that wakes up one day and decides it wants to change something. So as an investor, how on earth do you cope with, plan for, forecast something like that? A government diktat says all these companies have to become charities overnight. They have to suspend most of their services. They have to get rid of most of their staff. The sector is destroyed at a stroke. That's the kind of thing that you risk when you invest in China. They've also kind of revived thoughts of the 19th century opium wars with Britain. Now, these may not have been Britain's finest hour. I'm not going to try and defend our involvement in these opium wars. But what they're doing now is they are comparing gaming, computer gaming, to spiritual opium. I find that quite interesting that in a completely non-spiritual country like China, where Christian churches get destroyed and Christians get murdered left, right, and center. It's a very challenging place to have any kind of religious beliefs. They use a term like spiritual opium, but that's what they've done to describe the impact of computer gaming. So the National Press and Publication Administration, the regulator, has decreed that users under the age of 18, and that's 268 million people, so that's all of North America, if you like, would be able to play games only between 8 p.m. and 9 p.m. on Fridays, Saturdays, and Sundays. So suddenly you've gone from unlimited to 3 hours a week. And then people like Tencent, they just lost huge amounts of value because they make one of the most popular games there called Honor of Kings. I'm, of course, massive expert on all of these things. They lost a lot of money, and they're actually going to have to spend money to incorporate controls, measurement controls in their system that will actually implement these laws, so that if you try and stay on for presumably past 9 p.m. And you've logged in and you're only 17, it's just going to cut out. So you can't there's no way of getting around this. You are limited now to 1 hour a night. Now, obviously some parents will say that's great news, that these things have become addictive and all the rest of it. But again, what you have is government diktat destroying the market of companies owned by their shareholders. So my angle on this, leave aside the politics, from an investor's point of view, this is the kind of curved ball that can come in when you have a communist regime running a country where there are shareholder-owned businesses on public stock markets, and of course where shareholder-owned businesses in other countries' stock markets are doing lots of trade. So you have to take all of this into account when you're looking at your diversification strategy, when you're looking at exactly what funds you own, what countries they invest in, what sectors in those countries, and even down to individual company level, what's your exposure to this kind of government diktat? And of course, we then come on to Evergrande or Evergrande, the horror story of the month. They have finally admitted that their $300 billion debt pile is more than they can cope with. They are desperate to raise cash. They're trying to sell assets, but sales of finished properties and sales of unfinished properties have slowed down. They rely on taking chunky deposits off plan to actually not just pay for building the buildings, but to also cover all their other debts on all their other projects. So they have really been in trouble. Their share price is down more than 80%. Next year's bonds trading at 31 cents on the dollar. In other words, people think there's a relatively low chance of them being paid. They know they're missing payments now. I think they're giving people property in lieu of payments now. So you can become the proud owner of an apartment that hasn't been built yet in Beijing. And even the government criticized their debt mountain, which of course was just twisting the knife on the situation that was already really hard for them to handle. And this has kind of been China's Northern Rock moment, because they've actually had investors turning up at their offices demanding their money back. And the optics of that don't play well on the evening news. So clearly they're in trouble. But of course, as we found in 2008, if one's in trouble, maybe some of the others are very close to being in similar trouble. And already this contagion is spreading to companies like Fantasia and Guangzhou RNF. So there are others that are going to be sucked in. Now, the big question here is, are they going to get rescued by the government? Or could this be the sort of Lehman Brothers moment for China, which triggers all the house of cards collapsing? It's a tricky one. My crystal ball's no better than yours, but certainly it looks like a real issue that could actually trigger not just problems in China, but could have a ripple effect right around the world, because there's so much money involved. And obviously stock markets run on confidence. If that confidence gets dented, people's attitude to risk reduces. They're going to go to safe havens, which could end up actually being good for things like government bonds, maybe even gold that we talked about last week, who knows? But at the moment, this is probably the single biggest issue facing the Chinese economy. So to try and wrap this all up and put it into some kind of overall perspective, what are we not certain about at the moment? Well, I think we don't know how far these clampdowns will go. My impression from the research I've done is that there are about 14 separate clampdowns going on across different sectors at the moment. We've covered probably half of them today. How many more have they got planned? How tightly are they going to turn these screws on each of these different sectors? We don't know. Will there be a bailout of Evergrande, or will it trigger a meltdown in China? We'll probably know that within the next few weeks. At the moment, the noises coming out suggest there won't be a rescue, but what politicians say and do generally tend to be different. How far could the ripples of that collapse reach? Bit early to say, but things are looking a bit fragile in the West at the moment as well. There seems to be leaning towards a risk-off attitude. Some people are talking about a 10% correction, or maybe a 20% fall in the markets in the West. What about this new military alliance between the US, the UK, and Australia? That's obviously aimed at China, has already been seen as provocative by China. Would that mean that they would be interested in doing actions that might trigger more damage to Western investors as a kind of retaliation against that? It wouldn't be the first time that economic actions have been the result of military actions, and the interplay of those two. So it's certainly heightened tensions between the West and China, and that again must be seen as an increased risk factor for investors either already in China, or looking to put money in China, or hoping to get really exceptional results out of China. You've seen how government action can really inhibit success. Who knows what they could do in terms of foreign ownership of Chinese companies and shares, for example. What can we be certain about? I don't think China will ever allow companies or individuals to threaten the domination of the state. If you doubt that, just have a word with Jack Ma. You dare not speak out against the state, even if what you're saying is 100% accurate and correct. They will always sacrifice economic success to the maintenance of state power and to these communist principles. This was a workers' revolution. It's meant to be a workers' country, and yet they now have more billionaires than anywhere else in the world. So you can see the pressures on the state to be seen to do something about that, and the hell with the consequences to the economy, the companies, the investors, the share prices, the dividends, whatever else. Remember that. That's the main driver at work here. They could care less about your pension or your investment trust or your funds. They don't care about you one iota. Shareholders' profits and prices are going to suffer. It's already $1 trillion or more being wiped off values this year. Every sign suggests there's going to be a lot more pain to come, partly depending on what they do with Evergrande. But even without that, just looking at what they're doing across so many sectors, health, education, technology, real estate, these are some of the biggest markets in the world, and they are going after them with new regulations, higher taxes, more restrictions. That can only have a negative impact. But that all being said, how can you ignore a population that big, spenders so big, with 100,000 people spending a quarter of the whole budget on on luxury goods? If you're LVMH or Rolls-Royce or Aston Martin, you can't ignore that. You've got to be in that market. You've got to be trying to win your share of that market. So, will companies just keep taking the risk and hope for the best? What will that mean for their outcomes and share prices? Who knows? But it's too big a market to ignore. 500 million middle-class people by the middle of this decade. That's 2 Americas. What company can ignore that? However, I hope what I've shown you today is that it's not the one-way bet that it may have appeared even as recently as 2 or 3 years ago. Most people have been very optimistic that the 21st century belongs to China. Let's pile in some investments there. They must do better than the tired old debt-ridden West. Surely it's a better long-term bet. Well, maybe, maybe not. There's a lot to think about. There's a lot to make me feel that, perhaps it isn't going to be the massive success story that people were thinking. And of course, the final thought I want to leave you with is that you have to examine your own conscience to see if you want to actually invest in China at all. Personally, I've made a decision not to. It's impossible to say what that will cost me, but when you look at what they're doing in Hong Kong, when you look at some of their other actions in Taiwan, the South China Seas, et cetera, they are not being a good citizen globally. There's very few ways in which we can directly influence things like this, but indirectly, these kind of personal choices are one of the most powerful things we can do. So you must make your own decision on that based on your own research and your own evidence. So that is China. That's the current situation. I hope you found that useful, and do join me next week when I want to spend a lot more time looking at actually some of these important developments recently in terms of our freedom and the impact on our freedom. I'll see you very soon. Thanks for watching.